Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, January 15th DT Reports, a video update specifically for our YouTube subscribers. Be sure to subscribe to our channel every Saturday. We put up a brief update with one or two markets trade strategies for the following week. And if you like what you hear, check out our DT reports at dynamictraders.com. And also, you can follow me at Bob at DT on Twitter. I do just one chart with comments a day, more sometimes two. So let's get started and take a look at a couple markets and specific trade strategies for early next week. Let's take a look at the stock indexes to begin. We usually comment on those every Saturday, and boy, what a difference a week can make. As you know, if you've listened to these Saturday videos for past few weeks, I've been making the case that the stock indexes were in a major bear trend and were likely to continue much lower, and that the advance off of the December 26th low was likely a correction. And in fact, as of a week ago, it looked like we had made, or were in a position to have made, an ABC correction, and with a resumption of the bear trend. Well, the market continued higher last week, and whenever we have an outlook, specific outlook for a market, we have to identify what the market can do to void that outlook. In trading, it's what's your stop loss? Well, in forecasting, it's the same thing. What specifically can the market do to say that's probably incorrect? And that occurred last week, and we had identified that a close above the October 29th closing low. Let me back that up a little bit. Would void that bearish outlook and indicate that potentially we made an ABC correction into the December low. I had this labeled in Elliott wave terms as a wave 1 or A, and this is a wave 2 or B. And if it traded or closed into the closing range of what was the 1 or A, more than likely that's an A, a B, and a C. Besides that, not only did we close above that closing low last week, but we made a 5-wave advance, and a 5-wave advance indicates that the higher time frame trend should be bullish. So we have to let go, or I have to let go at least, of that probable bearish outlook and say the market has just said that more than likely it's either beginning a resumption of the bull trend, or it's going to unfold in a more complex correction instead of the impulsive bear trend that I originally anticipated. Meaning we could still have a correction that could continue even for several months, but the targets on the downside would certainly be much closer than originally anticipated. And we'll address that potential for a complex correction in future videos. But right now, let's take a look at the immediate position of the market. More than likely on Friday, we've completed, or we will early next week, a 5-wave advance. That would be what we call a daily high. That would be followed by a corrective decline lasting around 4 to 6 trading days, maybe even a little bit longer. But we have our daily momentums are dual look back overbought, the same position they were at what I got labeled a 3 and labeled a 1. Now those were just followed by 3 or 4 days sideways to down. Because this is the 5th section up, it should be more than those 3 or 4 days sideways to down. Friday was 2 key time factors to complete a wave 5, and one was just the simple high to high to high. That was Friday, 100% high, high, high. And the 100% alternate time projection, that is measuring the time of what I got labeled a wave 3 from the wave 4 low. They were both 4 days up as of Friday. So we're in a time factor to complete at least a daily high, and that should be a more significant high than either of this wave 2 or wave 4 correction. And because this is what's called a contracting triangle, more or less, or a wedge advance, the reaction against that is probably going to be pretty sharp. Again, not necessarily resuming the bear trend, but a pretty probably sharp, fast corrective decline over several days. And I suspect because of the time position, the dual look back overbought daily momentum position, it's going to occur. Well, Monday is a holiday in the U.S. U.S. markets are closed, but I suspect it's going to occur right away, probably on Tuesday. So if we get just a lower daily close, That will be a reversal day, daily reversal pattern, when we're at extremes of time, price, and pattern to complete that daily high. And we should then be sideways to down for at least 4 to 6 days, if not even a little bit longer. It could be certainly up to 10 days into the very latter part of January. But that's just speculation. The point is, we're very close to completing at least the section up from the December 26 low, and it should be followed by a correction greater in time and price than either what I got labeled at 2 or a 4. So be prepared for that early next week. The euro, as well as the dollar index, is another market that's on my radar for an immediate trade position early next week. And we'll take a look at the euro first. Probable 5-wave decline. Friday was, should have been, or should be, the maximum downside, at least on a closing basis, before we complete this wave 5 and what we call a daily low. Daily momentum's dual look back oversold in a position where daily lows are made. So if we get, again, a reversal day with a higher close in the euro, more than likely we've completed this 5-wave decline, and we'll have a 3 to 5 day corrective advance, followed by a continuation of the bear trend. The weekly trend is bearish off of this January 10th high. Let me just take a quick look at the weekly data for the euro. Again, we made dual look back momentum bearish reversals last week. That's usually followed by at least another, let's say, 2 to 3 weeks sideways to down when we make a weekly momentum bearish reversal. So any rally should be corrections. So just be aware of that. We're probably going to make a daily low early next week, have a 3 to 5 day correction, and the real trade's going to be in the days ahead when the daily momentum makes a bear reversal to be in sync with the weekly bearish momentum to continue the weekly decline. So I'm looking at this for a setup for a long trade the last a few days, but then really looking for the better setup's going to be in the days ahead following the next bearish reversal. And with the dollar, of course, is in just the inverse position. It should make a daily high by early next week. The dollar index, the extreme should be around 96.15 up to 96.22, let's say. That's a 62% retracement, 162% external retracement of what I got labeled a wave 4. And again, the real setup here, and you can, you don't have to do dollar index futures. For instance, you can do a dollar ETF. That'd be in the days ahead following the next daily momentum bullish reversal, because that should continue the weekly bull trend in the dollar, which should last for at least another 2 to 3 weeks. So that'll be a great setup once we complete this daily high. We get our 3 to 5 day correction followed by a resumption of the bull trend. Well, that's a couple of markets that I think early next week has some good setups to take advantage of. And it also is a good illustration with the stock indexes how we can build a case for a market going in a particular direction, but then we have to identify what the market can do to avoid that high probability outcome. And we have to be flexible. Then we got to shift our opinion of what the position of the market is and the probable higher time frame trend. So that's what we had to do with the stock indexes last week. But a couple great setups that should be complete by early next week. So take care, have a great week, and check out our reports at dynamictraders.com.